Hello, everyone. Welcome to another market review, daily market review. Sorry for the late video. I had to head out after today's session. I just came back, and I was also looking at the measuring gap video as I was talking about it in the on the live stream. So before jumping in the daily review, I think I'm gonna make a class about measuring gap because I need to study it a little bit more though before that because I was like looking at the historical data, looking at the kind of back testing it a little bit, and I've noticed some interesting and beautiful stuff. So measuring gap is it's a fair value gap that you look at its projection from the swing high or swing low. Okay, so it is a form of a fair value gap that can give you a precise projection. And the reason I want to make it a class about this stuff is because, I mean, in the event of we trading in all-time highs, we'll be using a lot of standard deviation projections. So it will be very useful, very insightful, and I've seen really cool stuff. So I have Nasdaq chart on the weekly in front of me right now. What I found is, so in 2021, we had a consolidation, right? Then it broke the range, breakaway gap, OB, and then we have a second fair value gap here. I believe this is I still need to learn it better though. I believe this is the measuring gap. So you look at the standard deviation projection of the measuring gap, like from the measuring gap low because it's a CB, all the way to the range high, and it gives you literally the low of NASDAQ right about here. Like very precise, very specific level. Now, let me go on to the buy side of the curve now. Let's delete this, clean the chart. Now we have an original consolidation smart money reversal here. Now, if I look at the breakout here, we have a couple of fair value gaps in this area, which is not a measuring gap. Like based on my understanding, measuring gap is after an order block forms or after a breakaway gap. So it's always or usually the second leg, the second displacement. So there is another fair value gap here. I'll take that as my measuring gap from the low, I think. It should be something like that. Again, I need to study this a little more here. This is the measuring gap. I'm gonna take that. And if we when we measure that fair value gap from the swing low or expansion leg low, it gives -1 standard deviation at the level we are currently rejected. I mean, we rejected already, the same level. I found this very interesting and very precise. And if that's the case, you know, who knows what will happen. And also, this works all obviously in every time frame. Let's leave that. So let's go down to the daily chart. Oh my god. Alright, I'll delete all that. This is from Sunday. So in this leg, what we have here, breakout, first fair value gap, second fair value gap, that should be the measuring gap based on my understanding. Here. So you measure it from the expansion leg low all the way to the high. It gives -2 right about there. It's not a specific level. Maybe I annotated it wrong. Let's see. I still don't like it. Again, guys, I really need to study this. I'm just showcasing what I just figured out. So here, I think we have an expansion one more time. Like pullback is over, 3 drives, expansion. We have another measuring gap here, I believe. I think it's this one. -2. Maybe this one. Seems like this one is the correct one. Let's look at this pullback here at the August price action. So the first fair value gap is not the measuring gap. This is not the measuring gap. Then there is a second fair value gap, second leg. This should be the measuring gap. Let's take a look at the projection. Wow, I would say this is pretty accurate, honestly. Here you can see the low, but I wonder if maybe this one would give the low of the day. Oh, yeah, this one. Here, -1, precisely that level tags and rallies. So again, I still need to work on this. I don't exactly know how to, like, what the real definition of a measuring gap. So once I figure that out, I'm definitely making a class about this. Let's take a look at this one. There are a couple of fair value gaps, and these are breakaway gaps. So breakaway gap is a different thing from it's different than measuring gap. So there is another fair value gap on the second leg. I would say that's the measuring gap. And if we measure the standard deviation from the expansion low to high, let's see what it gives. It gives -1 right about here, and it's respecting that initially. Pretty precise, I would say. Very, very precise. Oops, not that one. Here, yeah. There's also this one. But yeah, I just found it interesting, and I don't know, it was quite interesting. I just want to share this with you guys before I jump into um, the market review. All right, let's look at the market. But before that, I actually want to show you guys something. I was looking at the August price action, which I think it was a clean price action. I loved it so much during the day, during that time. And I think we're seeing something similar here, honestly. Because if you look at it, we had a first breakdown, rally all the way out to the extreme. Then the second breakdown, like look at this price action. So here, okay. So here, if you look at this price action here, specifically these lows, and compare this to this price action, it looks literally the same. Try to go for the low, fails, rallies, and that rally short-lived. It consolidated, formed. What did it form there? It formed. What is this? Trap. Accumulation above fair value gap. Actually, not even that. Hold on. I need to zoom in for this. Accumulation above fair value gap. Wicks. IFED. Then it's an inverts. Trap comes up for the BC or uh, the inversion fair value gap and sends. You can also take it from here too. It's the same thing really. Accumulation of our fair value gap collapses. Once it collapses, come back in towards the consolidation, sells off. Now, if you look at the most recent price action, I think it literally looks the same. Like today, we had that IFED on the daily fair value gap, and tomorrow, if it's range bound, obviously this is slowly going to reverse at some point. So yeah. Oh, also, I forgot to mention, I also checked this low here, and that low was an SMT divergence, not with ES, but with YM. Now, here's an interesting thing. We have an SMT divergence here, not with ES, but with YM. So it looks this looks like kind of like a same deal to me, honestly. But yeah, I just found these things very interested in, and just want to share it with you guys. Now let's look at the New York session of April 8th. I got a loss today for like 70 bucks. It really hurts, bro. It really hurt. So here, let me annotate 9:30. That's 9:30 and 4 o'clock. So this is the whole New York session. This price action here. So what we had here is we had an origin consolidation here. Okay, there's a consolidation. Price rejected this level for whatever reason. I mean, it was a PDL raid, so it ran the previous day low, rejected, accumulated, right? And then accumulation caused a rally at 9:30. So at 9:30, it caused a rally. There is a displacement, moved higher, then another displacement, moved higher. So there's a bullish order flow here. So if you think if you don't trust the first fair displacement, you can always use the second one, and the second one will be stronger anyways. So there is, because there's a reversal, we have high here, and also these original consolidations, market maker buy model, right? But there's no SMT yet. So you should be waiting for that SMT divergence. Once that happens, you can turtle soup that SMT. So here it broke out, kind of stalled here, and this slowed down price action formed an SMT divergence here with ES. ES ran that low, Nasdaq did not. So that is a turtle soup. You can long that into your original consolidation or the buy side, whatever the case is, whatever you're targeting. So it rallied, formed S&T divergence within a fair value gap. This is even better. It rallied, and this is a rejection. You can see the bodies. It's printed at the same level. One candle up close, the following candle is down close. Same open and close price, or close and open price rather. That's a rejection block. Once there's a rejection block, I think the likelihood of running the highs here is less likely because of the daily look. So if I go on the daily, what are the chances of running above this high today? I think it was slim because that was not a swing high today. Now it's a swing high. Now you can run it. So let's get back there. Also, the context of measuring gap, I also want to check that. Here we have a range low, first fair value gap, second leg. I think either this one or this one should be the measuring gap, so I'm going to look at it both. Here from the expansion leg low, this one and this one. I would say pretty accurate, to be honest with you guys. I mean, I would say really pretty accurate. So during the live stream, what I did was I implied the range here. What I did was we have an expansion leg low, then I considered the SMT divergence happening at range equilibrium. So I anchored my range EQ at SMT, the bodies though, slightly higher maybe. But anyways, slightly higher. So I said, okay, we have an implied target here. Implied target meaning this should be the drawn liquidity, overextended drawn liquidity, and it delivered. This is a pretty simple concept, and it usually yields really good return. Because like closing here, for example, still a win, but it makes a lot of difference. And today was not a large range, but in a short range bound day, like 27 points, almost 30 points is not bad. So let me delete that. So the buy model was delivered. Obviously, after taking the original consolidation, you can expect a choppy price action. And in that choppy price action, if it gets rejected at the highs or the price starts stalling, we can look for a sell model. Now we have the lows here, which is very, very suspicious. I think it's gonna, it wants to rally that low, rate the low for tomorrow. If I take a look at the range equilibrium here, right now you can see how choppy it is at the range EQ. Now you gotta wait for it to show its hand, obviously. So here at the highs, I need to pull up ES here to see whether we had a clean reversal or not. Where's this price line? Oh, here. So seemingly, yeah, there's no SMT divergence. However, there's something. There's something. Surely something. There's always something. It looks better on ES. Consolidation above a fair value gap invalidates or like flips it, comes all the way up to the back up to the rejection block, which is the ugly part of this price action because after this inversion, I think it shouldn't come come back to rejection block, but it did. That means price is manipulating furthermore. And that manipulation causes what? It causes an SMT divergence here. And that is your short signal. Or that ended up being a short signal rather. SMT divergence sent price lower. You have a fair value gap here. And sold off. Now what this price action is targeting? If this is smart money reversal, where's the original consolidation? Or the highest probability original consolidation? The highest probability original consolidation is right here. The old SMT is the highest probability sell side, and it tags there, and that's a trade. Once it tags there, you collapse the trade. I mean, it was priced, it was choppy. I got chopped here, but it's what it is. Sometimes it doesn't clearly deliver, right? It goes back and forth, slowly grinds lower, and it's what it is. Now let's take a look at the measuring gap also. I'm quite interested. I think this is the measuring gap. Let's see if it tagged the -1. It did not. Maybe that's not the measuring gap. Or maybe it is. I don't know. Maybe this is the measuring gap. I don't know. I think it's this one though. But anyways, that's not the context of today. So for high probability target entry though, what you can do is once you have the short idea in mind, you can look at the most recent range. Once it displays lower after the SMT here, you look at the dealing range from high to low. Range EQ did not get tagged, honestly. This would have been cleaner for me. It didn't happen, but it's what it is. It happens. Or you can look at the market maker model dealing range. You can try to find a short entry there, like here. And that was also an SMT divergence. But the ugly part about that price action is this was an SMT divergence as well. It just rejected it. Why did it reject it? It's because if you look at this price action, it's a thick price action. After a reversal like this, not a reversal, but a rally like this, obviously it's gonna have a hard time breaking below this thick price action. It's gonna either chop or like it'll try one time, fails, goes for a deep retracement, which is a trap essentially, and then rallies. Today it tried. It stayed weak the whole day and eventually tagged the low. In this slow grind, I don't see much, honestly, besides the SMT divergence at the range EQ. And that was pretty much it before sell side got tagged. But here's an interesting thing though. I have to mention this because I saw it during live session and it was quite beautiful. So here's the original consolidation low for ES. Now look what happens here. I gotta zoom in. So one asset delivers the sell side, completes the sell model, the other one fails, right? So this is the completion of NASDAQ, this candle for ES. Now that candle, here this one, market tries to rally, didn't do much, it's still range bound, comes down again, and it rejects at the CE of the wick, okay, the raid wick. And here, on the other hand, NASDAQ runs the low one more time. What is that? SMT divergence. And that SMT divergence did its job. It formed a buy model. And what's your target? I'll give you a time. What's your highest probability target? I would say it is the SMT, like this one here, the same deal, SMT high, because that is your original consolidation. It could go for here as well, but I'm talking about the highest probability one. I'm not talking about just potential. highest probability. So formed the buy model, came and rated the buy side, and that SMT is here on ES, so the target should be the SMT high. The buy model is completed on both assets. And afterwards, let's see what happened afterwards. So it rated a couple times here. Price kind of chopped a little bit though. So deep retracements and all that. It's just ugly. I think this could be range equilibrium manipulation also. Oh, I forgot to mention something here. Just saw it. So here in this reversal, not only SMT divergence is present, but also there is a trap. At CB, price accumulating below inversion. That inversion confirms the what? The trap. Trap is the accumulation. That is the trap. Now the low should be safe. So it rallied above. Worked the buy side a couple times and failed. And that failure is, as you can see here, I need to change the dealing range now. Now there's a new dealing range because the sell side is tagged. Here, as you can see, it tried to go above into premium 1, 2, 3, 4, 5 times, and it failed at all times. And eventually at 4 o'clock, it just broke down. So I think going into tomorrow, I think the highest probability target is the original consolidation from the pre-market from today. I think that is the highest probability target, and your dealing range would be this, basically yesterday's range. You should be trading yesterday's range. If you see, here I'll zoom in. If you see the range EQ getting broken down with energy though, and if market forms a fair value gap here specifically, that is high probability execution. This is what I call, I'm going to have a class about this as well. This is what I call a sniper entry. This is literally one setup for life. We had that yesterday. We have it every day, every single day. Now here, if you look at this price action, you can see the same thing. This is range EQ. I'll zoom in a little. And this is a shallow move, but it does the job. If you ever wonder why are we IFPD into fair value gaps, this is why. It breaks down below range EQ with a displacement, and there is this last, very last premium fair value gap. This is a very, very, very high probability fair value gap, and if you're correct about drawing liquidity, this fair value gap would be IFPD'd, meaning it's going to just wick into that fair value gap and sell off. And here it does the job actually. This is a short-term sell side. This is a scalp. I mean, not my trading style, but if you're a scalper, this is a scalp, and a very high probability scalp. So this is the type of price action you want to see tomorrow if you want to go short. Breakdown with displacement, one fair value gap above range EQ. That fair value gap should be it. So going into tomorrow, obviously, I'm very suspicious about these lows here, but also the fact that we tried to break down 1, 2, 3, 4, a million times, always failed. So it's kind of 50-50 right now, especially because we're at range equilibrium. Right now, what you need to do is, I'm favoring sell side, but what you need to do is you need to wait for chop to be over, and then it's going to show its hand to you. It's going to either form, oh, I just found a new shortcut. It's going to either form a discount fair value gap below range EQ to go higher, or it's going to form a premium fair value gap to go lower. So you wait for that. So you got to wait for it market to show its hand. So yeah. Other than that, I think this was today. I think we might have 3 drives or something on higher time frames. Let me see. I haven't really looked at the higher time frames. So we have a 3 drive on the 15 rallies afterwards. So south side, first south side, second, third rally. Other than that, I don't see much. We have and SMT diverges at the highs. And honestly, guys, I'm going to be honest with you. I am considering yesterday's rally, oopsie, this price action manipulation. So I really don't, I mean, I'm kind of talking prematurely here, so don't take my word for it. If you're watching this today before New York Open, don't take my word for it. But I don't think Nasdaq will go for the daily buy side. This is the daily buy side right now. I don't think Nasdaq will go there, and we have an S&T divergence here. So on the 4 hourly, ES traded above this, Nasdaq didn't. That's also an order block. Right now, I can see this forming a sell model, targeting the low here. Obviously, it's going to be step by step, so it's going to be this one first and this one first. But I can see this being a low resistance run. So consolidation here, I don't know how long it's going to be. Maybe it'll consolidate tomorrow as well. I don't know. Or it'll consolidate Friday as well. I don't know. Maybe it'll break down tomorrow. I don't know that. Or next week. So you got to wait for that. And in the meantime, you just need to trade range-bound strategies, right? Engineered liquidity or turtle soup or whatsoever. You gotta be you want to trade at range extremes, not in the middle. Okay, you remember that. Or don't trade it at all. You wait for a displacement, like range breakout, retest, and low resistance liquid run. Okay. Right now, gun to my head, I think this is gonna end up being a trap. Accumulation here. Obviously, it has a lot of resistance, so that's why it's accumulating. So if you think about it, like it's pretty simple. It tries to it comes down into fair value gap, tries to rally, fails. Comes down deeper into fair value gap, tries to rally from there, fails. So how many times can it fail is the question, right? Because as long as it fails to rally from these bullish PD arrays, it's bearish, or vice versa, right? So be mindful. I think this is going to end up being a smart money, a trap longs, trap longs here. But wait for the range EQ. I'm sorry, wait for this range specifically getting broken. Once it's broken to the downside, now you know the target. Pretty simple. And I think like most of you guys are in this group almost for what, like 3 months already. You guys can see this right now. This, hold on, let me actually paint it better. So here we had a consolidation, right? Rally, another consolidation. This is the kind of choppy price action, but rally. This is the buy side delivery, consolidation, breakdown, sell side of the curve. Now, almost all of you, this is a very bad drawing, but because of the magnets, now almost all of you can see this right now, or should be able to see this right now. Okay, and if I'm wrong about this, okay, if this is just accumulating to manipulate and go higher, you need to look at this range EQ, the fair value gap specifically, because it wants to go higher. If this ends up being a manipulation or pullback, it's going to reject here to go higher. So it's going to form something similar to this here to go higher. Okay. So yeah, hope you guys find this insightful. I'll be working on measuring gaps more because it's really interesting, honestly. Maybe like let me try it on the 4 hourly actually. So expansion leg high, fair value gaps. I think this should be the fair value gap, the measuring gap. Let me see. Let's look at the standard deviation. What if it's this one? Oh, this looks even better. It looks even better. I would love to see price going here. But anyways, let me look at the buy side of the curve. Range low. I believe this should be it. Or is it this one or this one? I don't know. I think maybe this one, the most recent leg. I don't know. Anyways, I'll look at this in private because I need to work on it. I don't want to confuse you guys. Um, Hold on. I just can't stop. Like these ideas came to my mind literally oh, there you go. Literally every second, and I have to try it. I don't know. I have this like character flaw or whatever you call it, personality. I think comes from Hollywood or being in the creative industry. So here's the range high, measuring gap, projection is -1. That's interesting. So here, I think this is the measuring gap. If that's the measuring gap, damn. If this is the measuring gap, and if it pans out, what this means is it'll come all the way up here to reject at a wick, at the daily wick EQ, CE. Holy shit. Hold on. I want to see it on ES. Here's the low. Here's the measuring gap. Let's see. Hmm, maybe this one. I don't know. Looks weaker. There's a rejection block here. I guess we'll see. We will see. But yeah, hope you guys find this insightful. Wow. Damn. Anyways, hope you guys find this insightful. I'll talk to you guys tomorrow in the live stream. Take care. Have a great night.